name is Max Thowless-Reeves, and this is Richard Farmiloe with me. And today we're going to talk about a subject which we can't really avoid talking about, though we take no great delight in the subject, which is Bitcoin.
And cryptocurrencies.
Cryptocurrencies in general. To put our sort of cards on the table from the outset, we are not owners of Bitcoin or Ripple or Ether or any of these cryptocurrencies.
We believe it's one of the biggest Ponzi scheme in history.
That's right, and it's worth just putting some historical perspective around it, which is where hopefully this might be interesting. We've been investors for a long time. We've sort of read an awful lot of books on the subject, and so we're familiar with some of the dynamics of how bubbles take place. And certainly, if you look at the performance of some of these cryptocurrencies, they have been not just clearly definable as a bubble, but arguably the biggest bubble of all time. They're bigger than tulips. They're bigger even than .com. I would say they've been narrower than the .com boom, which pervaded quite a lot of the stock market. But certainly in terms of some of the behaviours of some of the companies, it's been extraordinary. Should we talk about one of them? A company called Long Island Iced Tea.
Oh yeah, which changed its name to, what was it, Blockchain?
They called itself Long Blockchain,
yeah.
And then it saw a share price go up by 10,000%.
It didn't have any operations. It just announced an intention to invest in that area, and yes, the stock went up.
Now, there are countless examples of this where US companies particularly have changed their name just to include blockchain or sort of coins in there.
The SEC have suspended one such company, I think, in the last week or so, and they've signalled an intention to stop that kind of practice by
because
just changing your name.
It's crazy. How can it be reasonable that stock markets, which are supposed to allocate capital efficiently, can see the share price of these stocks go up so much?
But then we're into a whole different, the efficient market.
But that's right. But I mean, clearly it's not efficient. So why is it, do you think, that the share price has gone up so much? What triggers that?
I think because you've got a lot of unsophisticated investors. It's that simple. Over in the US, it's difficult for people in the UK to realise how prevalent individual investing is in the US. The content of share, the percentage of share ownership by individuals is much higher.
Yes.
So that leads to sometimes this kind of behaviour. But I think it's important to mention that if you look at every bull market of great length, and this is one of the longest in history now. We started in 2009, so we're 9 years in. If you look at those, if you look at the ones, let's say, in the 20s led to, a significant euphoria and Wall Street crash.
Yep.
The one that started in the 60s all through to the 70s, the early 70s, led to the mania of the Nifty 50, which was a number of select stocks where people thought that the long-term growth prospects were so great that it was worth paying almost any price to buy.
Yes.
And then if you look at the bull market, from the 90s, led to the internet boom or craziness.
Yep.
And I think so. Every bull market of length usually ends with some kind of mania, and I think the cryptocurrencies is a good example of that. Yeah.
I think without question. It's also, there's two elements. Quantitative easing clearly places a challenge to fiat money, sort of paper money, and so people are looking for a store of wealth, and so coins theoretically could offer that. But in practice, it's they are highly vulnerable to fraud and to theft. So as a store of wealth, that's not a good signal.
I think what will lead to the demise of cryptocurrencies, if I'm correct, firstly, you're already starting to see the signs that governments are taking an interest in terms of taxation.
Yep.
At the moment, the cryptocurrencies is a must stress an unregulated market.
Yeah.
And also another point, for example, Bitcoin. A large percentage of the Bitcoins out there are owned by just a few individuals.
Yes.
So the market can be easily manipulated.
Yes.
But yes, I think in the end, governments don't like to lose control of everything, never mind the money supply and their ability to tax So I think that's going to be a major sticking point in terms of Bitcoin.
Yeah, I think you're right in terms of the
or cryptocurrencies.
They're highly manipulatable, but it's also that there's very few actual transactions in them. So if you look at Bitcoin, the actual number of sellers out there is very few, but there's a constant stream of buyers. Now, an economist sort of came up with this sort of notion that theoretically there's no reason at all why the total value of Bitcoin could not exceed US GDP.
Oh, no.
Because all it is defined by the price the last buyer, the marginal buyer, is willing to pay for a coin.
I think at the moment a lot of the speculation that's going on the buying and selling of Bitcoin is private individuals, obviously.
Especially young men.
Well, in Korea and Japan, heavily leveraged.
Yeah.
But I think maybe the final phase is when the institutions decide, as I've seen one or two say, well, maybe we should have just 1% of clients' portfolios in Bitcoin because, as you say, it's a binary outcome. Either we make an awful lot of money, and if it doesn't work out, we've only lost 1% of clients' portfolios.
It is remarkable how the professional investors, the highly skilled, sophisticated, experienced guys, are always the last of the party and always load up at the very worst time.
If that is the case, and you start to see the institutional cash flowing in, then who's to say the current price of Bitcoin couldn't, go up an awful lot more before the whole thing, ends in tears?
Yeah, I mean, to put a cards on the table, we think it's fundamentally virtually worthless. And yet it creates situations when the guy who owned Ripple was worth more than Mark Zuckerberg.
Yeah, well, exactly. Ripple, the chief exec, theoretically was worth more than Zuckerberg, who owns a big chunk of Facebook, the most successful social media, and Ripple's got no revenues or anything.
No.
Whereas,
hugely
profitable business.
They don't stand a cursory examination before you recognise this is absolutely uninvestable.
Well, I think I'm not afraid to not steal, but take note of other people's ideas when it comes to stocks and general themes in markets. And they recently asked Charlie Munger, who together with Warren Buffett has built Berkshire Hathaway into the most successful investment vehicle of all time.
Yes.
And he was of the same opinion that it's just craziness and asinine.
Yes.
And it will all end in tears.
Yeah, it will. So we do get asked by a variety of people our sort of views about sort of Bitcoin and other currencies, and the advice is universal and unchanging, which is don't go near them. It's not an investment.
Or if you're going to, then you've got to be prepared to lose pretty much potentially all of the money.
Yeah, but it's betting on the 330 at Haydock.
Exactly. Yeah, there's no.
It's not investing.
No, if you're investing, if you're not investing, you're speculating.
Yeah.
And you're speculating that in the short term, what often moves prices of assets is not so much fundamentals. It's the volume of money moving one way or the other.
Yeah.
So, and if the volume of money, as I mentioned, from institutional investors starts heading towards cryptocurrencies, then again, you could see a further surge, but that's beyond my.
I agree.
Beyond my area of knowledge and remit, I guess.
Yeah, it's but there's a reason why that particular theory is called the greater fool theory.
Yeah, well, exactly.
You're relying for a greiter fool than you to come and pay more than you did.
Yeah, you don't get any return on your investment. You don't get, if you've got cash, or if you used to get interest on cash in the bank, now, but you used to get a return. And
it's not a trading business. There's no profits. There's no dividends.
With bonds, you get a return. With equities, you get dividends. So even if you can't find someone to buy your investment, you can still earn a return.
It has an intrinsic
bide your
value.
time. The greater fool theory, you don't get any. You're totally reliant on any returns for someone paying you a higher price than you paid.
So. Yeah. So broadly, we would not go near any of these things.
Well, that's correct.
Yeah. Okay, that's hopefully the last we'll ever talk about Bitcoin, and then we'll fade away quietly into the distance. But thank you.